Hey guys, this is Stephen Hooley, founder of Phoenix FXC. So in the last video we showed you a very basic chart markup of channels, of points and reactions and failure, of zones, how to convert a chart markup, not only how to do the chart markup yourself, but how to convert a chart markup that you see into a workable setup, right? So now, before we go into much further, we need to understand the different types of analysis. What we showed in the last video is called technical analysis, right? Technical analysis goes off of the belief that historical data can tell us the future, basically. Which there is some accuracy to this. There's a lot of human psychology, patterns, and things like that. Now the psychology side and the emotion side is going to be sentiment analysis. Keep that in mind. Each one of these reactions could have not only just been based on technical analysis, but sentiment, but people driving the market. Because you got to remember, people drive the market, bankers drive the market, algorithms drive the market. You've got to be able to differentiate between the different things, and then fundamentals drive the market as well. Economics as a whole, and that's fundamental analysis. I use all three types. There are people that will tell you you can use one, you can use the other, one is king. Really, they're all very useful. Big banks use a lot of technical analysis and a lot of fundamental analysis. They use what are called macros, macroeconomics or microeconomics, but macro meaning, the overall envelope of economics. So here, we've already gone through in the last video that there was some Wyckoff, there was zones, there was channels, support and resistance, how it reacted, how to mark this up, how to convert this into a workable setup. If we were going to do some, let's say, sentiment analysis, we'd want to understand where the reaction points are, right here. Price is reacting, people are reacting, they're saying no. Feelings are driving them downwards, right? To break through this zone and to go downwards. Feelings here are to get into this zone, touch this zone, go down from this zone. Feelings and psychology is the sentiment. Now, for news, we'd want to go and let's see, we'd go to, the nice thing about TradingView is it actually has an economic calendar, right? So we can see here the things that are coming up, right? So right here, the next thing that's coming up is AUD retail sales and inflation. So we'd want to look to see and study in these fundamental things, what would this make price do? Well, our technical analysis says it's probably going to go up. Do our fundamentals support this, right? You'd go do research on what is AUD retail sales inflation? What is AUD TD securities inflation? You'd go research this and understand, okay, if they raise a rate or if they say a certain sentiment, a sentence, what would price do, right? You'd want to use the fundamentals to support your technicals and the technicals to support your fundamentals. Why? Confluence. The last thing you'd want to do is have your technicals tell you, oh, price is going to do this, but then fundamentals make price do this, right? But you followed the technicals and you entered in for a buy when really it was a sell. You need to find confluences. We taught you how to do confluences with technical analysis on a basic chart markup. But there's more than just technical analysis. There's fundamental analysis and sentiment analysis and all sorts of different things that play into each one of these. Now in the next few videos, we're going to go through what each one of these things are in a little bit more depth. We'll go through technical analysis again, even though you've got a good taste for it. We'll go through more of fundamental analysis, and we'll go through sentiment analysis. And then we'll go from there. So thanks for watching, and we'll see you in the next videos.